Is gold a good investment in 2024? Top 5 gold price drivers. Gold is expected to benefit from several drivers in 2024. In this video series, we will cover the top 5 gold price drivers and reasons to invest in gold in 2024. To learn about all 5 reasons right now, plus a bonus, see the link to the full article in the video description. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. Gold price driver number 4, quantitative easing, how gold prices are affected by interest rate cuts. The next driver of gold's price in 2024 is accommodative monetary policy and the associated dollar weakness. As stated in the previous video, the servicing costs of the U.S. national debt will be in the range of $1 trillion this year at the present Fed interest rate. Unfortunately, quantitative easing by central banks, or money printing, stated loosely, is the standard remedy to a highly indebted system. It is largely believed that the Federal Reserve has ended their aggressive interest rate hiking campaign and that interest rate cuts will begin sometime in the first half of 2024. This projection is subject to change, of course, barring unforeseen economic black swans or the early onset of a recession. Simply put, interest rate cuts usually weaken the strength of the dollar and send the price of monetary metals like gold and silver up. Simply stated, the value and price of gold is inversely correlated with the strength of the dollar. It is worth noting, if the Federal Reserve pivots their monetary policy too early, this could lead to a resurgence of inflation. If this renewed inflation cross-current meets a recessionary front, this could lead to stagflation, which pushes gold prices even higher, as seen in the turbulent stagflation period of the 1970s. Considering the large amounts of fiscal spending that is still pouring into 2024, the prospect of this resurgence of inflation could be more of a possibility. The Federal Reserve can push down the demand side of inflation, but they have very little influence over the supply side, driven by uncontrolled government spending. This prospect of fiscal dominance is also accelerated by the historic debt-to-GDP ratio of 123% presently. This ratio is predicted to grow even more if the U.S. continues down this path of uncontrolled spending. It is worth repeating Mark Goldwine, the senior vice president at the Committee for a Responsible Federal Budget. We can't grow our debt faster than our economy forever. Essentially, for the past 2 years, the Federal Reserve has been slamming on the economic brakes as the U.S. federal government has been pushing on the fiscal accelerator. As the U.S. central bank begins to lift its foot off the brakes of the American economy by cutting interest rates on the demand side of inflation, the fiscally driven supply side of inflation is ready to peel out of the parking lot with greater speed, the end result being a weaker and inflated dollar and a dramatic surge in the gold price, as seen during the volatile period of the 1970s that witnessed violent waves of inflation, each wave larger and more intense than the last. Gold acts as a hedge against your losses in other income channels caused by the uncontrollable burden that is inflation. Gold also appreciates in price the longer you hold it. The reported measurements of inflation are one thing, the average lived experience by the regular everyday American is another. Please kindly leave a comment on your personal experience with the cost of living and its effects on your day-to-day behaviors. In the next video, we will cover the third driver in our top 5 reasons to invest in gold in 2024. Be sure to subscribe to this channel so you don't miss it. Also, see the link to the full article in the description below. If you're ready to get started on your gold investing journey, see the links to the free guides in the video description. Thank you for watching.